Yesterday, the euro had little reaction to data on March factory activity in the euro area states. Some indicators were better than expected. However, the fact that the manufacturing sector continues to shrink indicates that the economy is fragile and increasingly suffering from tight monetary policy. Similar statistics from the UK topped analyst expectations. The UK manufacturing PMI was revised higher to 50.3 in March from a preliminary reading of 49.9 and above 47.5 in February. Supported by such positive news, the British pound gained value. Later in the day, market participants focused on comments from Fed members, which were quite dovish. This helped the risky assets recover against the US dollar. Cleveland Fed Bank President Loretta Mester and San Francisco Fed Bank President Mary Daly stated that they think it would be reasonable to cut US interest rates 3 times this year. Now let's take a look at today's macroeconomic calendar. It includes data on inflation in the euro area. Consensus has Eurozone inflation falling to 2.5% in March from last month's 2.6 reading. Core inflation is anticipated to rise by 3.0% on a yearly basis in March, down from 3.1 a month ago. If so, the euro may come back under pressure on expectations that the European Central Bank will begin easing monetary policy as early as this summer. The unemployment rate is also due out today, but it will hardly have a major impact on market dynamics. The focus of traders will be on US statistics, namely the ADP National Employment Report. The private sector is estimated to have added 149,000 jobs in March, following a 140,000 gain in February. If data comes in line with economists' forecast, the dollar is unlikely to trim its early losses. Market participants may also take notice of the US Services PMI, which is expected to remain above the 50-point threshold that signals manufacturing is growing. If the indicator falls sharply, the euro and the British pound will extend gains against the greenback. What is more, Fed officials including Austin, Goolsbee and Michel Barr are scheduled to speak today. But all eyes will be on Fed Chair Jerome Powell's speech. If the head of the regulator reiterates his dovish stance highlighted at the last meeting, the risky assets will be able to extend their bullish correction, with the dollar suffering further losses. From a technical point of view, the 1-hour EUR USD chart shows that the euro has recouped losses incurred on Monday. Now, bulls need to protect 1.0758. A decline followed by a false breakout at this level will generate a strong buy signal, pushing the euro currency up to 1.0790. If the price breaks through and consolidates above this mark, it will be possible to add long positions counting on a rise to 1.0826 and probably 0.863. At the level of 1.0863, I recommend going short on the rebound to catch an intraday correction of 30-35 pips. Short positions at 1.0790 and 1.0826 can be opened amid a false breakout. If bears regain control of 0.758 and break below amid upbeat data from the US, the euro will dip to 1.0726, 0.696 or even 0.668. At the levels of 0.696 and 0.668, it would be wise to go long on a rebound in the hope of intraday correction of 25-30 pips. Going long at 1.0726 will be irrelevant in the event of a false breakout. Speaking of the British pound, the situation is similar. A false breakout at 1.2567 will make it possible to buy the GBP USD pair. Given that today's macroeconomic calendar is bereft of any important news releases from the UK, this scenario is highly likely. As such, sterling will climb to 26.01, a false breakout of which will allow sellers to enter the market. If the price breaks above 26.01 and tests it from the top down, a strong buy signal will be generated, with the British currency rising to 1.2639 and 1.2671. At the level of 26.72, traders are recommended to go short on the rebound, expecting a 30-35p move. Short positions at 1.2639 can be opened only amid a false breakout. In bear case scenario, if the price fixes below 1.2567 and tested from the bottom up, the British pound will dive to 1.2538, where I recommend going long amid a false breakout. Long positions on rebound can be considered at the levels of 1.2507 or 1.2482. In this case, one can earn on an intraday correction of 25-30 pips. Best of luck.